Gold and silver have an incredible future, of course, but gold right now, looked at the chart before I left, given the silver thing. Now that they've announced this and all the front running is taken, I actually think gold is going to come down a bit first. It's not ready, so you're going to sell off a little bit, but in the range, in the 3,200 to 3,450 range, until we're ready to break out for good. I don't believe we're ready to break out yet. Tariffs increase the cost of things to the local nation. Trump has passed taxation onto the US citizen.
Gold's bull run continues, driven by sovereign demand and global instability. While markets recover from April's sell-off, underlying policy and structural risks remain unresolved. Francis Hunt, known as the market sniper, recently addressed criticism about his stance on precious metals, clarifying that his approach focuses on probabilities rather than directional bias. He notes a higher likelihood of pullbacks during this period with a smaller chance of deeper declines. Gold dropped last week but remained within its $3,000 to $3,500 consolidation range. This pullback appears to be part of a stabilization process before the next upward move. Hunt views the recent breakout as confirmation of a new bull market with strong momentum characteristics. Silver has achieved a decisive breakout, officially signaling the start of its bull market with multiple confirmations. According to Kitco News, analysts have maintained a consistent bullish stance on silver since last fall, publishing reports that highlight the metal's strong investment case. Hunt says this breakout validates the technical setup he anticipated for months. Throughout the past year, gold reached new highs, while silver lagged, repeatedly hitting resistance at the $32 to $33 and $34 to $35 levels. These zones blocked several breakout attempts, keeping silver in prolonged consolidation. Hunt notes this extended sideways movement strengthened silver's technical foundation for the eventual breakout. The pattern shifted a month ago when silver broke through both resistance zones with conviction, marking the potential beginning of a sustained uptrend. This move could allow silver to catch up with gold's performance, with the breakout's substantial volume and decisive action suggesting genuine momentum rather than a false signal. Silver now appears positioned to test significantly higher levels, potentially launching a multi-year bull market. This video examines the sustained upward momentum of gold and silver, their bullish long-term outlook, and the strong rallies that often follow pullbacks, while analyzing price movements and key drivers over recent years. Subscribe for weekly, data-driven insights that complement our in-depth market analysis.
Is you could even avoid a demand-destroying event, and they're just going to pump resources to the moon. What happens is they're going to create huge inflation. So let's get back to the gold and the tariffs on 1 kilo Swiss bars. Why the gold and the tariffs on 1 kilo Swiss bars? Well, here's why. They want everything to be tariffed, which is inflationary for Americans. Yes, Americans, they just announced another tax on you. So it also potentially means refinement and other things that Switzerland does could come into trouble. But I do note it's on 1 kilogram and above of bars. Now, last time I checked, roughly a kilogram was well over 130, 125,000 K. So in truth, that's not going to be getting to everybody. They want inflation. They actually secretly want inflation. And why is the Fed not cutting? Because they don't want to look future stupid. The tariffs are starting to be properly applied and stay, and they are inflationary. Why do the insiding cartel want inflation? Simple. Because it impoverishes the most of you that aren't invested, the normies, and most of you are normies. But how many of mainstream land are sitting with a whopping great portfolio of silver stocks, gold stocks, and actually stocking bullion itself? How many of you? Outside of this YouTube channel, let's say, normies. What percentage do they hold of gold, silver? So how many people do you think, guys, are actually holding stocks and shares in silver miners and gold miners on a meaningful scale? We know the hedge funds aren't really, unless they're specific commodities one. We know the hedge funds and the family offices aren't holding much gold either. It's between 0.5 and 2%, and most of it's at the 0.51% levels. So how many stocks of silver do you think they have? They're under. So if these guys pump resources, which is what will happen, inflation goes to the moon. That's why they're lying about the inflation currently. They want to keep lying until they can't lie any further. They lied to you on the pivot. It's coming, it's coming, it's coming. They kept people hanging for a major pivot for about 3 years before I think you had maybe one cut and then nothing more. They're going to lie to you on inflation. That's why they're using an estimation measure that's come in with the tariffs. So they've got a new component to how they're measuring inflation, which involves guessing. I'm going to do some technical videos that will show, let's stop right here, that we are in fact in a very good equity for silver and gold miners bull market. That's on like no tomorrows. Absolutely. I'm also going to point out that notionally all stocks can go higher. But here's a little fact for you. Notionally, a lot of things are going to go to all-time highs. But divided by gold, even divided by the Swiss franc, for example, many of those things are not actually in new all-time highs at all. What you're actually seeing is asset price blow-off inflation in stock markets that could be coming. And as a result of that, gold and silver have an incredible future, of course. But gold right now, looked at the chart before I left, given the silver thing. Now that they've announced this and all the front running is taken, I actually think gold is going to come down a bit first. It's not ready. So some guys will say, you were a bear silver, or you were a bear gold, or you're... No, we said there's a possibility of there's a higher arching possibility and probability of pullbacks during this period. And there's even a possibility, although lower, that you could have a breakdown into lower levels. Now, after that violent up move, it looks more like you're going to be contained in the range. So you're going to sell off a little bit, but in the range, in the 3,200 to 3,450 range, until we're ready to break out for good. I don't believe we're ready to break out yet. Tariffs increase the cost of things to the local nation. Trump has passed taxation onto the US citizen, and at the same time, he has reduced market share of importers to America. He wants to increase market share of local by American, but it is a protectionist measure, and in the long run, it's a deglobalization measure, and the whole world gets smaller by total GDP. It hurts everybody, including the nation who's doing it, than an open borders policy and free trade. Now, we didn't have that. We didn't have full no tariffs. But in fairness, America always had tariffs on certain things, and Eurozone did too. Sometimes higher, sometimes lower. China does too. But we are going into a commodity resources mega bull. That's why they are positioning in farmland, that's agris and softs.
Francis Hunt argues that wealth is being deliberately eroded through high inflation as part of a broader agenda. Since AI is inherently disinflationary, he believes policymakers intentionally generate substantial inflation to offset its price-suppressing effects and maintain upward pressure on prices. This perspective aligns with recent warnings from the Federal Reserve. Governor Lisa Cook cautioned that while AI adoption could be disinflationary, policymakers cannot rely on it to offset inflation quickly, especially when pro-inflation measures, such as tariffs, are in place. The American banker highlights Cook's concern that, if you're a policymaker and you want to implement some sort of trade policy that might be inflationary, AI productivity gains may not come fast enough to counter those effects. Hunt identifies oil prices as a primary inflation mechanism. Following the principle oil up, inflation up, he recalls the property boom that occurred when oil surged above $140 per barrel, preceding the 2007 subprime crisis, which demonstrated the powerful inflationary impact of energy price spikes. This relationship reflects broader economic principles where energy costs permeate virtually every sector of the economy. Supply shocks that disrupt production, such as natural disasters, or raise costs, like high oil prices, reduce overall supply and create cost-push inflation. In this scenario, price increases stem from supply disruptions rather than demand pressures. Let's get back to the video.
Now, when you have a lot of debt that you need to devalue, what you actually need to do is create inflation. And I just want everyone to understand, inflation is their tool. It's their favorite tool. It's the silent, slow tax on you that makes you poorer and them richer. It increases their assets and devalues their borrowings. So billionaires are rich because they borrow debt that's devaluing, and they bought productive physical assets that are increasing in value. It's on this channel that we've told you that inflation is an impoverishing tool for the working classes, a wealth destroying tool for the middle classes, and an absolute enriching tool for the banker classes and the mega rich. It's their favorite tool. That's why they do it. Here's how it goes. We could even not have a demand destroying event. Now you'll know me as the guy who says almost certainly one is coming along, but potentially they could, without having a demand destroying event, and I was talking about this to a community member, just create a major surge in resources. How do you create inflation? Well, you guys will know that they create inflation often with the oil price. Oil up, inflation up. When we had the property boom, inflation went to $140+ just pre-subprime in 2007. I thought I had charged it. In actual fact, they are destroying your wealth through a very high inflation that they intend to mask for as long as possible. In short, it's part of their agenda. It's where they're taking you. It's absolutely part of the agenda. And the AI is disinflationary, so they need a shit ton of inflation. So everybody doesn't realize you can have an average, and the average can be reasonable growth and reasonable amount of inflation. But it's also, averages are misleading. You can have 1 foot in a massive bucket of burning hot coals and molten iron, and you can have the other foot in an absolute tundra of secured ice block. And you may, on average, be at 36 degrees positive. But generally, you're not doing very well. You're about to lose both feet. So you can totally have disinflationary things. And who's those disinflationary things most going to benefit? All the things that they do that services you, serving you. You're going to have, it's like chat. You have a bot, AI bot chat instead of a human. They don't need to pay a salary anymore. You're going to get chat GBT, chat this, AI that, delivering a lot of the services that previously labor was there for. You think you're getting something personal, you're going to find out it's a program that has the details on the kind of things you like and how to communicate to you that makes you most happy. It'll talk about motorbikes and stuff to me and very rapid scooters so that you can have a hoot in its examples because it knows who I am. So the biometric ID, the real world assets being tokenized, are 100% where we're ending up. Quite a steep hill, yeah? The brakes, funny enough, are pretty shit on this thing, which is very ironic given the power. It's literally the British TVR. Incredibly fast. I don't know if Americans know what TVRs are. Made of fiberglass and light and zero braking, or very crap braking. So inflation is needed, and tariffs are the tool for the times. What you're actually looking at is the debasement of the dollar and the provoking and the absolute promotion of inflationary policies whilst talking an anti-inflation, lower the rates game. That's Trump's role. With Powell, with everyone else. We want lower rates. We want lower rates. Go Trump, he's working for us. Go MAGA. Go, go. Yes, the Zionist is on our team. He just wants to give all our money to Israel, Ukraine, and put tariffs and taxes on everything we buy so that everything we spend goes up in price. By the way, I made an error. I said 134% in a year. I should have sanity tested that in my last video. The tweet actually said since 2020. She had a basket since 2020 and did, from Walmart, stocked the same goods in the basket online, and it was 135% higher. So since 2020, you have had a more than doubling, almost 2.5 times. Think about that, guys. Think about that. You've had an almost 2.5 timesing in the costs of Walmart goods. That's your daily bread, your milk, your coffee and everything. So they are lying about inflation. It's the most important number to lie about. Since tariffs, they actually put a special new liar metric in there, much like the birth-death model. See our previous video about the great fraud and lie in statistics. From job numbers to unemployment and participation, right the way through to inflation.
Like gold's enduring role as a hedge against currency debasement and economic manipulation, This framework operates by offsetting the natural cost-lowering effects of technological advances with deliberate policy measures aimed at driving higher prices. Just as gold holds its value when paper currencies lose purchasing power, these inflationary strategies are designed to preserve debt devaluation and boost asset prices in nominal terms. By sustaining inflation despite the presence of disinflationary forces such as AI-driven productivity gains, the system ensures that those strategically positioned in appreciating assets can profit. At the same time, the broader population faces a gradual erosion of purchasing power and long-term financial stability. Stay tuned for more data-driven insights into the evolving financial landscape. If you value grounded, fact-based analysis, hit like and subscribe so you never miss our weekly updates. I appreciate your support and enjoy the video.